Hey guys, it's Will here. I'm going to go through the stock markets and the sectors and some ETFs and stocks that you can look at. And if you've been following my videos, you know that I've been talking about a downtrending market for quite some time based on the charts. And so it's never been a great time to get in just from an upward momentum type of perspective. But the question is now whether things are turning around. So let's take a look at the market. So the Nas, I've got like a tab here with the main markets, and I'm using TC2000. What you can do is have all these different tabs with different watch lists or different whatever scans and stuff like that, and down here as well. So you can put a lot of information in a short space, and then there's tabs down here with all sorts of different types of charts and views and stuff like that. So if you want to get a free trial or $25 off your purchase, check out the link in my description of the video. What I try to do in these videos as well is show you some of the features. So I'll do that as well in this video. So with the NASDAQ, you can see what I look at is obviously, the moving averages, the downtrends, the main lines. If I put on so there's the drawing tools here, you can see we have this channel, kind of like a downtrending channel. So from that perspective, we haven't changed. One positive thing, which happened up here as well, was we broke over the 50-day moving average, which is starting to curve up a bit. And so this one was starting to curve up a little bit here, but then it failed at the 200-day moving average. But sometimes you can at least get things for a few weeks from the 50 to 200. They can buy in between if you don't want to hold forever. So what happened was, a lot of times you'll break through the 50-day and people will buy right away, that's fine, but then it pulls back and then it supports at the 50. You can see. What we have here is actually from a candlestick, which I don't totally talk about, but I do look at candlestick patterns, is what they call a kicker signal. So you have an open with this black candle, an open, and it goes down. And the next day it opens at the level of the previous open or higher and goes up. So they're like going down opposite directions. So the actual gap from the bottom, from the close of the previous day, is quite large. And that's a very energetic sign. So obviously the Fed talked yesterday. There's also a lot of earnings. So it's a highly risky time in the sense that there's announcements with the Fed. Now basically they said, the 3/4 raise, which everyone expected, somewhat of a dovish speech. From people are interpreting things differently, but the thing in the future will be if they have to raise rates more, if inflation doesn't come back down. So we're not out of the woods in that sense, but people liked what they said, what the Fed was saying. The other thing was we had different earnings situations. So we had, even with some negative earnings with Microsoft and Google, they went up a lot. And then, you have Snapchat going down. Facebook went down as of last night because it's like the first time they haven't had, there's been a negative result on their earnings or whatever, or revenues. Let's just take a quick look at Facebook before now it's up 8%. Oh, that's not the one. Meta, sorry. So it's down 5%, and that's some of these are fairly large percentages of the NASDAQ. So that's partly why we see. Oh yeah, another good feature of TC2000 is you click on this related items, you get all the stocks in the ETF. So if we sort by, say, negative, you'll see what is not doing so great. So let's see here. The other thing to note is that I'm looking at the pre-market. It says 6:55 a.m. and that'll change wildly from now until 9:30. In one way or the other, it could go up or down from there. But these are all generally in the same situation. So we've had a breakup above the 50. So the good news was, and one more thing, there was a bit of a trend here that got broken, and obviously there's a bigger downtrending channel, sloping line here, but this one here from May was broken, and the support is shown to be at the 50. And in the S&P 500, similar situation. Broke above the 50 and we had support, and there's also higher lows here. So we have this low here, and there's one here. Sometimes I'll draw a short little line at the main lows just to show that it is stepping up. So even though we had these downtrends, a lot of times we don't end up getting higher lows. Like it broke here and then it came back down. Here we now have this one. You could even consider this to be a double sort of bottom situation. Not a big one, but just a similar state where the buyers stepped in. So let's see, Dow Jones. We've got this channel here, upper trend line, that we're getting close to. But we did get above the 50 and we had that support yesterday. So one good way to buy if you're going to get into something is if it's in an uptrend with higher lows, but it's also had a pullback. So what I'll do is I'll draw a line. Like if I watch what's happening and I see this, candle come back down, I'll draw a little line like that. And then when I see the support, especially at a moving average, and that would be an entry point. So it's a good place because you can do is put your stop, or mentally prepare to stop, have a stop below the low of that candle, or like if there's a moving average nearby. So it gives you that low spot to sort of use as your stop. And finally, in terms of moving averages, in terms of indices, IWM. So you can see they're all in this down channel that I've been talking about for quite a while. We had a failure at the 50. This time we broke above the 50 and we supported at the 50. So that short-term sign is good. Oh yeah, the other thing, I look at price percent oscillator. Ideally, that you're above the zero line. That's when the momentum is great. It doesn't mean it's going to work. Like right here, you can see how it reversed here. But we're still like the 50 is below the 200. If you go back to times when things were really good, like this, I always look at what the ideal scenario is. You're above the zero line for price percent oscillator, which is like MACD. Your 50 is above your 200, and your 21 exponential is above your 50. So you have this sequential series of moving averages that are, above each other. And you can see here where we're negative, the 50-day is below the 200. And so, you have lower highs and stuff like that. So not out of the woods in terms of the work that needs to be done. There's a lot of resistance. When you start going back up after a downtrend, you have all these people that are down and they want to sell once it gets up to a certain point. So it's going to take work to get, whereas a lot of times in the past, like say after you broke up above this high before COVID, before the lockdowns and all that, this was all open sky with no resistance at all, just all new high prices. So that's kind of the main indices. The TSX in Canada has been there's been a bit of a response here as well, but still work to do, not even above the 50 for that one. So then I go to the US sectors, ETFs. I've got a whole bunch of ETFs that over time I've added to a watch list. So if you want to, if you're looking at a stock, let's say Tesla, for example, and there's this plus sign, you can say add to a watch list. You can create a new one, or you can add to your watch list. So that puts the stock or whatever into your watch list. And then if I click on a watch list, say I go to personal watch lists here, and let's say Canadian stocks. Now there's a little move window. I click on that and I say move. And then it shows me a tab here, tab down here, or on the window of the chart. I'll hit escape to get out of that. And that's how you put a bunch of tabs, of things into your various windows. So if we look at ETFs, there's different ways you can sort things. but obviously a lot of tech, Ethereum, Bitcoin Trust, cloud-based stuff. There's so many things that went up a lot. You also have a little bit of GDX. I mean, this is a really bad situation here, chart, and we're not really breaking out. There's no green volatility stuff, but there's been a little bit of a, let's check out silver. This is better, a little bit better. So I drew this line here, which is the downtrend. So sometimes you break a downtrend like this, but it doesn't last. It hits a 50 or some other resistance, previous support level that turned into resistance. But there's a period of time where it goes down and then it starts to flatten usually. And then now we've broken out. So we're above the 80 MA, above the 21 exponential. We've crossed, but the only thing is we're down low on the price, on the momentum. But if you wanted to get in, and then of course you've got the 50-day nearby. So there's not, a huge percentage there, but you could potentially get involved. And, and the interesting thing is that there's no real pivot per se. The Fed is still going to be raising rates, but the idea would be if they started lowering rates or printing more money, then this stuff would run probably more strongly. But it's been beaten down pretty badly. So a lot of things went up yesterday. So we'll have to see. I also look at the weekly chart just to see if we have ideally a start of a green weekly momentum crossover would be. So I've got a column here above the weekly, and that's a conditional column. So there's columns that are like numerical, and then there's columns that are conditional. So that means it'll be a checkbox or not. And that means in your condition, you're saying, is it greater than X, whatever your condition is. So in my case, I'm saying, is the price above the volatility stop, which would imply that it's green. And so I can see quickly, I can even sort if it's a weekly, if these are above with a weekly. So tan is a solar chart. This is one that I like because on the weekly chart, we've broken this downtrend here. We've got a higher, you've kind of established a higher low. There's been a bit of and it kind of stuck at the 50-week moving average, and now it just broke above. So if we go to the daily, actually today it's even up 4.8% again. And so you could buy right on that breakout, or you could wait after a breakout for a pullback and then another leg up. But this is one that is moving. You can run scans on this stuff. There's quite a bit of stuff now that's past the scan, so it's a little bit trickier when you have a lot of things. So you can see how a lot of things have this really nice pattern where they supported at the 50 and they bounced up off of it. So it's like yesterday was excellent. Now, when you have that emotional response after a speech, you can get reversals on that as well. So it's not just a strong, it's hard to say. You have to kind of watch and see, but there is a risk that doesn't last. But you have a recent entry, a recent low to use as your stop, like the 50 is right there. So if you do buy, you've got a good spot to use as your stop. I think that's all I want to say. Oh yeah, one other thing I did when I talked about pullbacks, what I did was, instead of looking all the time, if you do look around and see something that looks like it's in an uptrend and you want to wait for a pullback, you can add that to a watch list and then look at it. But one thing I did with the formula was I have this pullback opportunity. So what I said was, I'm in an uptrend, so the close is greater than the close 5 days ago. The close 5 days ago is greater than the close 10 days ago, 10 trading days ago. But also, this is actually built in. And the 10-day is greater than the 15. You can change that to make it shorter, like just 5 and 10 or whatever. But the one I added was the close is less than the close from the previous day. So you could change that to be the close from 2 days ago, or But basically what I wanted to show was that the stock has been lower. And so that limited, right now, because we just had that update, it limited those results. But I was getting a lot of these results, which was a lower close after in an uptrend. And so that would have been a chance, that would have been a time when I'd be watching. And then you can see a couple that didn't. Natural gas. So for example, natural gas has been in a really good uptrend, but it kind of went straight up, without much of a pullback. So you can put that on a watch list or use the scan like I have. But once it's in a watch list, you can draw a line. Like, see these lines here? You can right click on them and say set alert. So when you start to see a pullback, you can set an alert and then say, trigger me. So for example, right here, I'll draw a new line just so you can see. If you saw this uptrend and there's a pullback here, and you start to see that candle as well, you can sort of go like this, and then right click on it and say set alert, and then you have this candle, which is a black candle, but then all of a sudden you popped up. Now the risk is you see this pullback, but what you would do is you'd have your stop at below this low here, so you see how it never got down to that low before it started going back up again. And of course, other times, you just get this continuous uptrend. So it depends on your term of how long you're going to trade for. But so that just shows that the other thing is that I use the same formula for Canadian sectors. So you see here, when you click on this drop down, you can pick your own watch list or the general stocks or ETFs. And then there's one for US sectors. And this shows you uptrends, like little short-term uptrends, but then waiting for that pullback, waiting to buy after you've had a down day. Maybe you're going to wait for some strength and a new uptrend candle. So that is hopefully useful to you guys to see all the things you can do with the scan. So good luck with that. If you want to get TC2000, I highly recommend it. I use it all the time. I love it. Check out the link in the description below the video. Thanks to everybody who's picked it up. Hope you're enjoying it, and we'll see you in the next video.